What is happening, crypto universe? Get ready for a massive data dump because the market is moving at lightning speed, and you need to know what's going on right now. We've got breaking news that could reshape the entire financial landscape, major shifts that are shaking up investor confidence, and critical technicals that are painting a vivid picture of where things are headed. You absolutely cannot afford to miss these updates. Are you ready to dive deep into the action? Let's get into it. First up, we're tackling the ultimate question. Will Bitcoin make gold history by 2030? We're talking potential price tags that sound like science fiction, but the conditions are laid out, and the data is compelling. Is this the moment digital gold finally claims its throne? Then, we're tracking a significant investor pivot that's signaling a major change in the crypto ecosystem. As Bitcoin's dominance wavers, altcoins are surging. What does this mean for your portfolio and the overall market trajectory? Next, we're dissecting a dramatic price drop that sent Bitcoin reeling. What triggered this sharp decline, and what are the key technical indicators telling us about its immediate future? We'll break down the factors behind the fall. And finally, we're analyzing the critical support levels that could determine the integrity of the current bull market. We'll explore the strategic risk management needed as the cycle matures. Stay locked in, because this is information you can't afford to be without. Don't forget to smash that like button, subscribe for all the latest, and ring that notification bell so you never miss an update. Could Bitcoin replace gold by 2030? Price surge potential revealed. The age-old question of which asset reigns supreme as a store of value is hotter than ever. And the spotlight is firmly on Bitcoin's potential to usurp gold's centuries-old reign. We're diving deep into the fundamental differences and surprising similarities that could see the digital asset challenge the precious metal by the end of the decade. At its core, Bitcoin's value proposition is built on an unshakable foundation of scarcity. Capped at a fixed supply of 21 million coins, its digital nature ensures that no more can ever be created, a stark contrast to gold, whose total supply remains an unknown quantity. While gold extraction continues with new discoveries and technological advancements, Bitcoin's supply issuance is programmatically halved approximately every 4 years through the halving event, creating a predictable and tightening supply schedule that is hard-coded into its DNA. This inherent digital scarcity is a powerful narrative for investors seeking a hedge against inflation and a reliable store of wealth. The decentralized nature of Bitcoin is another key differentiator. Operating on a global network without a central authority, transactions are transparently recorded on the blockchain, making them immutable and resistant to censorship. This leaderless characteristic provides a level of autonomy and security that traditional assets, often reliant on intermediaries like banks and governments, cannot match. While gold can be held by anyone, its movement, storage, and even its accessibility can be influenced by institutional gatekeepers and governmental policies. Bitcoin, on the other hand, offers a path to self-custody and global transferability that is unparalleled. Imagine moving a fortune in value across continents in minutes with just an internet connection, a feat that is logistically complex, costly, and risky with physical gold. Furthermore, the issue of authenticity is a non-starter for Bitcoin. The blockchain's public ledger eliminates any possibility of counterfeiting, providing absolute certainty in every unit. Verifying the purity and authenticity of gold, however, often requires specialized expertise and equipment, leaving room for doubt. This inherent trustlessness is a significant advantage in the digital age. So, how does the ambitious $1.15 million price target for Bitcoin emerge? This projection is based on the scenario where Bitcoin captures gold's entire market capitalization as the dominant store of value. With gold's market value estimated between $20 and $22 trillion in May 2025, and approximately 19.91 million Bitcoins in circulation, equating Bitcoin's market cap to gold's implies a price point well over $1 million per coin. Even capturing a fraction of gold's market share, such as 50% or 10%, would translate to prices exceeding $500,000 or $100,000 respectively. Historically, Bitcoin's volatility has been a major concern for its adoption as a safe haven asset. However, recent data suggests a narrowing gap. While Bitcoin's annualized volatility was around 52.2% in Q1 2025 compared to gold's 15.5%, by August 2025, this figure had decreased to 45% for Bitcoin against gold's 12%. Some analyses even indicate Bitcoin's long-term volatility is now just 2.2 times that of gold, a significant improvement. This shift is partly driven by increasing institutional adoption. The approval of spot Bitcoin ETFs in early 2024 opened the floodgates for major financial players like BlackRock and Fidelity. Public companies, led by MicroStrategy, are increasingly adding Bitcoin to their corporate treasuries. Even cautious entities like pension funds are exploring Bitcoin exposure through ETFs. However, a clear divergence exists. Central banks continue to favor gold, viewing it as a hedge against dollar volatility, with no major central bank holding Bitcoin. Conversely, younger generations, particularly Gen Z and millennials, express a strong preference for Bitcoin over gold for long-term savings, signaling a generational shift in wealth preservation strategies. Navigating Bitcoin's path to potentially replacing gold involves overcoming regulatory hurdles and cybersecurity threats, challenges gold doesn't face. Yet, Bitcoin offers a unique, borderless, and digitally native alternative for a new era. While gold will likely remain a foundational asset for conservative institutions, Bitcoin represents an innovative hedge against modern financial uncertainties. But is this digital gold surge sustainable, or are we seeing a significant shift away from the king of crypto? Stay tuned as we break down the latest investor movements and the rise of altcoins. Bitcoin's grip loosens, investor shifts fuel altcoin surge. The cryptocurrency market is witnessing a significant rotation as investor sentiment appears to be cooling on Bitcoin, with capital increasingly flowing into burgeoning altcoin projects. This seismic shift is marked by a substantial sell-off from a long-term holder, triggering a sharp price correction for Bitcoin and highlighting a potential redistribution of wealth within the crypto ecosystem. Bitcoin experienced a notable downturn, shedding approximately $5,200 in just 3 days. This decline was precipitated by a massive sell-off of $2.59 billion worth of BTC by a long-term holder, who reportedly moved a portion of their holdings to the hyperliquid platform for liquidation. The immediate aftermath saw a $310 million flash crash, pushing Bitcoin's price below the critical Ichimoku cloud, a key technical indicator often used to gauge market momentum. This sell-off not only impacted Bitcoin's price, but also contributed to a broader market sentiment shift, with the total crypto market capitalization losing an estimated $100 billion in a 24-hour period following the event. In stark contrast to Bitcoin's recent struggles, emerging altcoin projects are capturing significant investor attention. Arctic Pablo Coin, for instance, has successfully raised $3.62 million in its presale, showcasing robust demand for new and innovative ventures. This surge in altcoin interest coincides with Bitcoin's market dominance falling to its lowest point since January, registering at 58.21%. This data point strongly suggests that capital is being reallocated from the market leader to a more diversified basket of digital assets. Further evidence of this capital reallocation can be seen in the aftermath of Bitcoin's sell-off. Reports indicate that a significant portion of the proceeds from the Bitcoin sale was channeled into Ethereum, with investors opening long positions on the second-largest cryptocurrency. Similarly, projects like Turbo and Snek are reportedly benefiting from this trend, indicating a broader market appetite for altcoins that may offer higher growth potential or different investment theses. Technically, Bitcoin's outlook has become more cautious. The formation of a death cross, where a shorter-term moving average crosses below a longer-term moving average, on the daily chart signals bearish momentum. The Relative Strength Index, RSI, dipping below 50 also suggests weakening buying pressure. While the price is currently consolidating within an ascending channel, a breach of its support line raises concerns about further declines. Potential downside targets are being eyed around $105,400, with a more bearish scenario pointing towards $93,571. However, bulls are looking for a rebound to $124,548, contingent on a resurgence in demand. The market dynamics underscore the inherent volatility and evolving nature of the cryptocurrency space. The actions of large holders can have a pronounced impact, and the current trend suggests a maturing market where investors are increasingly diversifying their portfolios beyond the dominant asset. The performance of emerging projects like Arctic Pablo Coin and the capital rotation into Ethereum, Turbo, and Snek will be crucial indicators to watch as the market navigates this period of transition. But what exactly caused Bitcoin to tumble so dramatically, and what does this mean for its immediate future? We're breaking down the technicals and the massive whale activity that's sending shockwaves through the market. Bitcoin plummets below $109K. Whale sell-off triggers massive liquidations. Bitcoin's price has taken a significant hit, plumbing new depths and testing two-month lows, as a confluence of factors including a massive whale sell-off and widespread overleveraged positions have sent shockwaves through the market. The king of cryptocurrencies has fallen below the critical $109,000 mark, raising concerns about further declines and the integrity of the current bull cycle. The primary catalyst for this sharp downturn appears to be the colossal sale of 24,000 BTC, valued at over $2.7 billion, by a significant whale investor. This move triggered a cascade of liquidations across the derivatives market, wiping out approximately $900 million in leveraged positions. The selling pressure not only erased gains made following Federal Reserve Chair Jerome Powell's dovish Jackson Hole speech, which had previously propelled Bitcoin above $117,000, but also led to Bitcoin trading below key technical indicators, including the 100-day simple moving average and the Ichimoku cloud. This technical breakdown mirrors patterns seen in February that preceded a substantial price drop. Analysts like Simon Peters from eToro confirm that the whale's substantial sale was the main driver, noting that this whale, likely an early adopter, is realizing significant profits at current price levels. The market's fragility was exposed by the sheer volume of liquidations, particularly affecting long positions. Bitcoin traders faced $277 million in forced liquidations, while Ethereum saw $320 million wiped out, with 90% of the total $900 million in liquidations being long bets. Jamie Elkill, Chief Marketing Officer at BitGet Wallet, points to broader market liquidity challenges exacerbated by ETF outflows and reduced on-chain activity. These factors leave order books thinner, making the market more susceptible to cascading liquidations from large transactions. Adding to the bearish sentiment, historical data suggests September tends to be a weaker month for Bitcoin, with average losses recorded during bull market years. From a technical perspective, Bitcoin is currently testing a crucial support zone between $110,000 and $112,000. A decisive break below this level could pave the way for further declines, potentially targeting the 200 EMA around $104,000 and even the psychological $100,000 level, which coincides with the 50% Fibonacci retracement. Market pricing currently indicates a 35% probability of Bitcoin revisiting $100,000 by the end of September. While Bitcoin experienced a significant pullback, other major cryptocurrencies showed mixed performance. Ethereum, ETH, saw an 8% decline but maintained trading above its 100-day SMA and Ichimoku cloud, indicating relative strength. XRP held above its 100-day moving average, albeit within the Ichimoku cloud, while Solana, Sol also stayed above key technical levels. This divergence suggests a potential rotation from Bitcoin to altcoins, with analysts anticipating outperformance from Ethereum and Solana if the market stabilizes. Despite the retail liquidations, institutional accumulation remains a key theme. Leo Zhao, investment director at MEXC Ventures, notes that institutional and sovereign buyers are using this dip to increase their exposure, underpinning Bitcoin's long-term trajectory. MicroStrategy's continued accumulation of Bitcoin, even near highs, exemplifies this confidence. Furthermore, upcoming economic data releases, such as GDP figures and inflation reports, could provide catalysts for a market recovery if they signal a slowing economy and cooling inflation. With Bitcoin facing such significant headwinds, what does this mean for the broader bull market and its overall integrity? We're analyzing the critical support levels that could make or break the current market cycle. Bitcoin's bull market integrity tested, navigating critical support levels. In the dynamic world of cryptocurrency, the integrity of Bitcoin's bull market is under scrutiny as key support levels are being tested. This analysis delves into the strategic risk management necessary to navigate a maturing market cycle, where understanding technical indicators and investor behavior is paramount for predicting future price action and preserving capital. The current market environment is characterized by significant volatility, with Bitcoin recently experiencing a sharp price decline. This downturn has brought critical support levels into focus, areas on the price chart where buying interest is expected to emerge, potentially halting further declines. For Bitcoin, these levels are not just arbitrary numbers. They represent psychological barriers and historical price floors that have previously supported upward trends. A decisive break below these levels could signal a shift in market sentiment and potentially invalidate the current bull market narrative. Analysts are closely watching the $110,000 to $112,000 zone, which has acted as a temporary support. A failure to hold this range could lead to a retest of lower levels, including the 200-day exponential moving average, EMA, around $104,000, and the psychologically significant $100,000 mark, which also aligns with a key Fibonacci retracement level. The market's reaction at these junctures will be crucial in determining the short to medium-term trajectory of Bitcoin's price. Understanding the factors contributing to these price movements is essential for effective risk management. The recent significant sell-off by a large whale investor, coupled with the liquidation of leveraged positions, has highlighted the market's sensitivity to large-scale transactions. Furthermore, the broader macroeconomic environment, including inflation data and central bank policies, plays a significant role in shaping investor confidence and risk appetite. A cooling inflation rate or a more dovish stance from central banks could provide a tailwind for risk assets like Bitcoin. The maturation of the Bitcoin market is also evident in the growing institutional adoption and the divergence in investor behavior. While retail traders, often employing higher leverage, are more susceptible to forced liquidations during downturns, institutional investors are increasingly using these dips as opportunities to accumulate. Companies like MicroStrategy continue to demonstrate strong conviction by adding to their Bitcoin holdings, signaling long-term confidence in the asset's potential. This trend suggests a market that is evolving, with a growing divide between short-term speculative trading and long-term strategic investment. For investors, strategic risk management involves a multifaceted approach. This includes diversifying portfolios, employing stop-loss orders to limit potential downside, and staying informed about both technical indicators and fundamental market drivers. It also means understanding the cyclical nature of the market and preparing for periods of both expansion and contraction. As the bull market matures, the potential for increased volatility and sharp corrections grows, making disciplined investing strategies more important than ever. The question of Bitcoin's bull market integrity hinges on its ability to hold key support levels and the resilience of institutional demand. While short-term price action can be influenced by numerous factors, the long-term outlook remains anchored by the fundamental value proposition of Bitcoin as a scarce, decentralized digital asset. Navigating this phase requires a clear understanding of the risks and a commitment to a well-defined investment strategy. So, after all this action, what are the key takeaways from today's market movements? We'll give you the lightning round recap and tell you exactly what to do next. All right, that's a wrap on today's Market Pulse. Bitcoin might be facing some turbulence as investors eye altcoins, but the potential for it to rival gold remains a massive story. We saw a huge whale sell-off trigger a massive price drop and liquidations, but institutions are still buying the dip. Plus, we're keeping a close eye on those critical support levels that could define the bull market's future. Stay informed, stay strategic, and most importantly, stay invested in your financial future. Don't forget to like this video, subscribe to Bitcoin Bulletin for all your crypto news, hit that notification bell so you never miss an update, and let us know your thoughts in the comments below. Follow us on all social platforms for more real-time insights.